right, good morning, everybody, and hope all you traders are doing well. And so I've come to take the task of making a video today. So I want to come in and talk a little bit about this strategy that I like to do here, and it's very, very good, especially on a news heavy day when there's a huge, huge, huge spike up and no real action with the stock, pushing up, pulling back, pushing up, pulling back. It's just one shot straight up. I call it the gap fill strategy. Maybe you've heard this before, but I've noticed this that it always, pretty much all the time, 85% of the time, off a heavy news day, it literally plays out. Now I am on the simulator. I am up 2,600 on the simulator here, or 2,262, my bad, on the simulator. So definitely, live trading is going to be a little different. I've done live trading in the futures market for maybe like 2 months, 2, 3 months. And then I've kind of been reading, learning about day trading and sim trading, for a bit, about, what are we, March? Yeah, like literally about a year right now. And literally throughout this year, every time there's a new spike like this gap fill strategy literally all the time plays out beautifully. So, you have a basically price has not had time to go up, pull back, and test this area here, okay? Like price just shot straight up, no real action happening in the middle. So basically, you're looking for right off the open for price to just want to fall back and test that area. Price has to test that area. So as you see, it consolidated up here, made a range, and now you could have played a breakout if it wanted to break out. But on a day like today, I wouldn't really have that in my mind. Even though I would consider myself a breakout trader. But you could, if you want to play the breakout, then boom. I probably wouldn't play the breakout. I'd probably play a break and retest, and if it holds, then enter in for the continuation. But as you see, price tried, I think, to break out here. So it got pulled back off the open here, and then the buyers came in up, and then as soon as it touched the high of the range, sellers came in and pushed that down. Not just once, but one, two, three, and 4 times with heavy long wick rejections to the downside. I love seeing these long candle wicks because the price was once up here, but the sellers came in and they just pushed that down, pushed it down. So therefore, when I see that, that tells me that there's sellers there and they don't want this market to go higher. And then you see these lines, the blue ones, the VWAP, and then I have the EMAs here. The green ones, the 9 EMA. I have 21 and the 50 EMA. And then basically every time it got pushed down under the 9 EMA. And for me, that's important because when the when there's a trend that might start occurring, if it holds under that 9 EMA like beautifully, then that's an indication of a strong trend for me. So basically, also my rule of thumb is to play long when we're over VWAP and play short when we're under VWAP. So as you see, it broke this range here. I'll put a line just so you can see it. It broke here, and then to me that tells me that's the direction it wants to go. It broke the VWAP. I did get in here for hopefully a continuation, I guess a breakout. It's technically a gap fill slash breakouts that you're taking, but I got in short here and then it started pulling back, but the pullbacks weren't strong. The buyers couldn't. It wasn't like a quick pullback. Like there was a battle going on in this candle, and then it pulled back, and then I did add more, and then it just wanted to retest that VWAP and I guess that area of support, which would be now resistance, but it held under VWAP really nicely, and I added more at the VWAP, and then this whole time under 9 EMA, and then this was the doji candle, and then this one I took some out here just because I wanted to wait for a break, but then this candle right here, beautiful candle, went all the way up, and every time it went up to the 9 EMA to test, and even the VWAP, the sellers came in. Like they just came in and pushed it back down, and that's amazing confirmation that the shorts, that my bias for the short position is like, I guess, getting stronger in this scenario. So literally, price when happening live went up, rejected. Again here, up, rejected. up, rejected. More pin bars, more tail bars, whatever you want to call them. And then this one right here, heavy bearish bar. Beautiful. I got in, and then I have other levels. Where are they at? Did I mark them? Here, let me go on the 5-minute real quick. Okay, so levels that I had, essentially my target would be down here, this break, where the news happened, like the news came in and the move happened. And then I have a level over here on this one where the price is right now. And then I had one up here. And then, yeah, that's that one over there. Just push that up. I don't want to see that. All right, my bad. So, zooming back in. So basically, we're at the first level here, and then it was holding because it was a support level, which is fine. So I wanted to wait for the break of that support level, and it did break, so then I added more back in, and then it pulled back, still under that 9 EMA, and then under this break here, I added more back in, and I essentially rode it down to the, here, I push this a little higher, where this is where I got out right here. So essentially filling that gap all the way down where the move happened. And then it's not just, I'm doing Tesla today. It was also on the scanner, on the gapper ups. And if you watch a pre-market show, you would have seen that. But basically, the gap has been filled, and it's literally not just on Tesla. Like, I've seen this happen on every single stock on a news day. AI, for example, literally the news came in, started making higher highs, and then literally I was anticipating a breakout to the upside. I wanted that, but obviously when the market opened, it just crashed down, and it wants to fill that gap. So what did AI do? AI filled the gap. It even went even lower. So this would have been a nice play to the short side, holding that 9 EMA, and I wouldn't have gone out until we get a close above the 9 EMA. So right here, I would have gotten out, and that would have been the trade. SPY. SPY is beautiful when it comes to these gap fills, especially when the SPY wants to fill that gap. Everything else wants to fill that gap. So as you see, price shoots up, hasn't been tested in this area, so right off the open, it wants to fill the gap here. And it was even filling the gap in pre-market. So like honestly, I would do a pre-market trade for this too, like 100%, if I was doing like ES or whatever, if I was trading the SPY. But yeah, so it just fills that gap even off the open all the way back down to where the move started, and then here's the demand zone, and then boom, the buyers come in and they start pushing it back up. So that is my gap fill strategy. And see here, I got out here, and yeah, I did pull back and then made a lower low, pulled back and a lower low, but this was my play. This is the play, just to fill the gap. And then what happens here, the buyers come in and they pushed it back up. So essentially, this is like, I've seen this happen multiple times, so this is why I love this gap fill strategy off news related, heavy news related days like this. So this is one of my strategies that I play off a heavy news day, the gap fill strategy. If you guys enjoy the video, and hopefully you guys, if you're trading simulator or live, you're doing amazing and you're growing and you're learning. And yeah, thank you, and hope you guys have a wonderful day.